I love to trade news, and there's nothing more gripping than war headlines. They can trigger big, fast, extended moves in stocks, gold, oil, the US dollar, and currencies. However, trading news, let alone global conflicts, can be tricky. You need to position correctly, make the right moves, and avoid making the big mistake of selling the bottom. That's what we're going to talk about in today's video. Hello everyone, I'm Kathy Lean with BK Traders, and I teach people how to trade with fundamentals and use that in conjunction with technicals. Make sure you subscribe to our channel for regular tips that can help you become a better trader. Now, geopolitical risks can come in many different forms, from sanctions, a trade war, threats of intervention, and full-scale attacks. Right now, everyone is watching the tensions in the Middle East, which have boiled over in the past few weeks. So much can be said about the long war between Iran and Israel, and that's certainly not what I'm going to talk about today. I'll leave that to the political commentators who have a lot more to say. We're going to talk about trading, and we're going to talk about how to trade around these major conflicts and how to profit from it. I want to show you some charts. The first chart is the chart of Dow futures right after Israel was attacked by Hamas on October 7th. It was over the weekend, if you remember. And by the way, many of these big events actually happen over the weekend. They seem to be prime time for major geopolitical developments. Markets gapped open when the attacks happened. But then take a look at what happens next. It consolidated, traded back up well past pre-attack levels. Then, on April 13th, when Iran launched a major drone missile attack on Israel. At first, the market sold off to new lows when the markets opened, because that was also over the weekend. And then it snapped back and rebounded for the rest of the Asia session into the New York Open before selling off again. Most recently, Israel on April 18th retaliated and attacked Iran back. Markets gapped lower and then stabilized around 10 to 11 p.m. Eastern Time. And what happened? It reversed completely higher. The same thing can be seen in gold, currencies, and oil. We actually took this Aussie yen trade at BK Traders. It was a short trade for completely separate reasons, which was surprise job losses in Australia, Japanese yen intervention risk, lower stock prices, and this Aussie yen zip sell signal. But the fundamental story was the background. It was really the conflict headlines that triggered the big move, giving us over 113 pips on the trade. And I certainly did not take as much as the market had given us after the announcement. But the smartest decision and the trade that I made was actually to not trade and get back in and to take my profits. When it comes to trading war headlines, geopolitical risks, global conflicts, it is very easy to get emotional. You think World War III is going to happen. You think the selling will intensify, leading to a 1,000-point drop in the Dow. But in reality, most politicians want to avoid that. I've watched this happen over and over again. You have the war headlines and politicians come out and try to downplay it. And, usually the capitulation is followed by a snapback as politicians, try to say, this was a one-off event, they're not going to do it again, or maybe it didn't even happen before they actually boil over again. So as traders, what do we do when conflicts brew? Here are my 3 trading tips. Tip number 1, when the headline hits, you need to be quick if you want to ride the move lower. I would say that you have about 60 minutes before there is a reversal. You have to know when to stop trading. Once you've built up a big profit, you have to be responsible and realize the chance of a rebound is high. So take your profits and run. It is easy to make money during these big events, but hard to keep it. Tip number 2, usually these type of attacks do not come from left field, even though the Hamas attack on Israel did, although some people will argue they did have intelligence beforehand. If there are geopolitical tensions brewing like right now, it's much better and much smarter to be short than long because the upside is limited by uncertainty, while the downside is wide open. The biggest problem that you have in this type of scenario is slippage. If you get a 60, 70, 80, 100 point sharp drop off the headline risk, I guarantee you that even if you have a stop, you're going to be filled at a much worse level. And this is a huge problem because if you're trying to be a good trader and you think I'm only going to allocate a certain risk per trade, then all of a sudden something like this happens and you're filled much worse. That could be a big problem for your overall profit and loss, your P&L. Now, if you are short, I can also guarantee you that these brokers will not be giving you positive slippage. They're not going to fill you at a better price than you had asked for because they are in the business of making money. So they have no reason to give you a better fill. But there's far more slippage risk to being long than being short currencies, equities during times of geopolitical tensions. Now, the reverse is true for gold. There's far more risk being short gold than long gold. But really, the big moves usually happen in equities, indices, and currencies. Tip number 3, if you want to get back into the trade after it's rebounded, wait for a break of the news headline level. What I'm talking about is over here. We have the attack happening and Dow futures are selling off right at this candle. So the smartest way to wait for the news candle to break is ideally, and we don't have it right now, you see the market sell off. And then what you do is you watch the rally. And what you want to see is you want to see this level, this horizontal line level that I drew, broken. If Dow futures comes back down to this level and we break through this level, that would be a good time to sell. Now, you can see also this in Aussie yen. This was the Aussie yen trade that we took at the Asia Open right over here. And this is the news candle. And what I did here, and I'm going to move this up, is I drew a line because this level here is basically the low from these areas. So it's an important support level. I bumped it down a little bit to cover this candle here, this low of this candle. So what I would say, and you actually do see Aussie yen starting to move towards that level, is if we break this level at 98.96, this news candle area and form a support form a support level. If this level breaks, that's when you can find a smarter place to re-enter the trade to the downside. So if you want to be a smart trader, you need to know how to combine fundamentals with technicals. Check out the links in the description below for a big discount on my fundamentals trading course. Also, if you want to get Zip or my trade ideas, the link for BK membership details is also in the description below. I hope you learned something. I hope you found this video valuable. Happy trading, everyone, and subscribe to my channel. I'll see you all next time.